Hello traders and welcome to ChrisFX. Today I'm going to go through the breaker block, plus I'm going to show an example of a trade that I called in the community in my Telegram group. And it is exactly this trade right here for which we are still into the trade, and despite the fact that we had only two good chances within this whole week, by risking only 0.6% per trade, this is the part of the evaluation phase where we have already finished half of the evaluation, and I'm showing that to you just to show you how strong the trading signal group is. I have made 2.6% only by risking 0.6% per trade and only with two good trades. The other ones that you see right here were trades that I said close the trade, we will not hold the trade anymore. So these results are impressive for this past week, which was a very bad week, and I still have part of the trade running. Actually, this is 0.5% still running, but I'm targeting even higher for the next profit. So very bad week overall. In terms of high probability opportunities, I only call and enter the best opportunities. So if you want to see something like that, let's say, then you shouldn't be entering my signals, you should be entering a gambler's signals. But if you want to see the beautiful graph that I showed you beforehand, which is this graph right here, then you should definitely enter my signals, because imagine this is the bad week. This is what we do in a bad week. Okay, enough with the talking now. I'm gonna show this trade that we took, but instead I'm going to show you how to enter with a breaker block in case that you have missed the initial entry. Here we are on the 4-hour time frame, S&P 500. We are waiting for price to enter a discount. Price did all of these shenanigans right here, and of course I had my areas pinpointed already according to the ChrisFX courses. So this was one of the areas, this was one of the areas. Now if I scale down to a lower time frame, actually we will go down to the 1 minute time frame. What was I expecting? Let's open the news right here, because this is very important as well. And as you saw from the previous video how I predicted price to the pip with the facilitation of the news, you will understand how important news are, not for giving a certain direction to the price, but for taking price even more impulsively to these areas that the algorithm is gonna take price anyways. So here it was Friday the 24th. Okay, let's go to the 24th. Look at that. 9:45 a.m. we had news. What did I say in the Telegram? Let's see what the 9:45 news will bring. Initially I said Nasdaq buy there, or I said SPX 500 at 39.1411 with a stop loss there. Then I said SPX new buy there, move your order actually with the same stop loss, and I will show you what this means. If we get activated at the SPX trade, take profit 1, 70% there. We are into the trade, first partials here, and then I said there is a chance that price is going to retest this area. I was referring to this area right here. So what did I say? All proof here. If this last fair value gap does not hold, we will more likely than not lose this trade. Now move S&P 500 stop loss there. We change the take profit there, first target hit, second target at there, move stop loss over there. Then I'm gonna take you to the trade. 9:45 we had news. As a result, I wasn't willing to enter with this change of character from this area, for example. Otherwise, if this would happen at 9:45, I would have entered, even though it was not very impulsive, but I was waiting for 9:45. I was pretty sure that price was gonna come back into this area, of course, from my experience, and I was even waiting, to be totally honest with you, for price to grab the liquidity below this area right here. Did this happen? No, it didn't. As far as I can see, if I zoom in, it did not happen, but I was expecting that as well. 9:45 comes, price comes impulsively back into this area, and then we change character very impulsively. what do we have here? What did we leave behind? We left this beautiful fair value gap. And I'm gonna talk about the breaker block. Of course, if you want to skip this whole thing, you can skip it, but I strongly advise, since I'm providing this information which is extremely valuable for free, that you go ahead and watch the whole video. Not only watch this video, rewatch it again and again and again. You don't need to go to 2000 different channels. You will not find this information with this analysis anywhere else, so stay here on ChrisFX and learn absolutely for free. And of course, if you want to perfect your trading, you can join my courses to see how I always pinpoint the best areas, or just join my trading signals if you want to get the signals and enter the trades that I am entering. So let's see in this occasion, what did I call as a trade? Here you can see the exact same spot. This is where we entered with the facilitation of the breaker block. Let's talk about what is a breaker block. Some people call it a failed order block. I trade it only in occasions where we have reacted from our area, we have our bias, and we would like, for example, to enter from this area, this fair value gap. Many times price is not going to retrace back here, so you can trade the last candlestick up here, as you can see it, this candlestick over here. You can place your pending order instead on top of this candlestick. Many times price is gonna react as it did right here. You see the initial reaction, and many people advocate that you can place your stop loss right below the low of the breaker block. Now in this occasion, where you're gonna count those two bullish candlesticks or this candlestick, I would count this candlestick because this is the one that went above this candlestick. So I would have put my stop loss below this candlestick as well. Do I trade like that though? No, I don't. I always place my stop loss below the lowest point. So my stop loss was exactly right here again. Where was the take profit now? The first take profit, you can see it was exactly right here. If I copy and paste this profit level, it does exactly this one as I have placed it right here. Why this one? Because if we go, for example, on the 5-minute time frame, we can see I have placed it to the point that we run the liquidity above this area right here. I want to play it safe, as I have talked about it, and closing 70% of 1.4 already gives us 1 unit of risk, I shall say, as a profit in this occasion. Then we moved our stop loss initially here and then higher. Anyways, you could instantly go for a 3-to-1. I am not doing that, especially with this account. I am playing it on the safe side, and generally I'm managing my risk very, very strongly. So the breaker block, instead of entering, once again, instead of entering right here, okay, which would have been a better entry in this occasion, but we could have missed the trade, we did enter from this failed, let's say, order block, this breaker block right here on the top of this one. The stop loss could have gone just below it, could have gone here or here even. Let's see, if I zoom out, we would have been stopped out in this occasion. That's why I always place my stop loss below the low as well. Before I give you another example in the same exact scenario, I will tell you something. What did I say here? Look at this area right here, this fair value gap. What did I say? I said there is a chance that price is going to retest this area. I will not close my trade personally. If this last fair value gap does not hold, we will more likely than not lose this trade. We did not lose this trade because price came indeed to retest this fair value gap. Then we moved the stop loss right below this area, and then of course we adjusted it as price was moving towards the upside. Let's move on to a higher time frame now in the same exact area. Let's go, for example, to the 3-minute time frame. Let's say I will delete the trade that we took from this breaker block, or we can even stay on the 1-minute time frame. This will do it. Let's continue on this time frame. Let's say that you missed this move from this fair value gap, and then you see this explosive move towards the upside, as you see it right here. I will even delete this line. We broke impulsively above this area and we broke impulsively above this area as well. This is another occasion of a breaker block and a very clear occasion of a breaker block. And yes, you can consider this whole thing as your breaker block, but we will consider the last candlestick before the down move. So I will take this candlestick, the highest candlestick. When I'm trading it this way, but as I said, I'm placing my stop loss at the lows, only at the beginning of the movement. In this occasion, if you want to trade the breaker block, look how perfectly you could place an order here. If I would do that and if I implement this type of trading in the future, I will be risking only 0.2%. It might sound silly, but look at that now. Stop loss right below the breaker block, this failed order block in other words. Right here, you can identify the breaker block from the fact that price did not react at all when it came back to this area right here. It did not react at all. We didn't have something like that and then went. We just broke impulsively towards the upside. These are the strong breaker blocks. And these are the breaker blocks in general. So stop loss right below this breaker block. Entry exactly at the top of this breaker block. Look how tiny of a stop loss we have here, 2.59 pips. If I take you now to a higher time frame, you will see why I would be risking only 0.2%. Because if you now target this high right here, it is a 14-to-1 reward to risk, which happened, guys, within 3 hours. Within 3 hours, a 14-to-1. So if you are a little bit more on the crazy side, or if you have tested the breaker block, back tested it, I mean lots of times, and you are pretty sure of what you are doing, imagine risking in this movement 0.5%. Imagine what you have. Look, 13.66 times 0.5, you have a solid 6.8% return in your account. The fact that I'm showing you how to trade the breaker block, which is the proper way this thing to place the stop loss right below it, it does not mean that I am trading it like that. In situations like this one, where I have a fair value gap, but I see very impulsive candlesticks happening, when we form another fair value gap such as this one in this occasion, even though this one does not qualify exactly as a breaker block, why doesn't it? Because if you take this area, you will see that we had a reaction from this area and then we went. So it is not even close to what I showed right here, but we are just gonna refer to it as such, which is not actually the perfect example. So in this occasion, just I want to simplify things for you. I don't want you to be confused. I want you to make the best trading decisions. Do not get stuck with the semantics. I'm just showing you how I took this trade. But if we want to be technical and correct, this is the one that qualifies as the breaker block. I just showed you two different examples, let's say, one that resembles it, that we entered from and placed the stop loss on the lows, and one that is a very strong one, which might hold because we don't have a small, not even the slightest reaction in this area. So this makes it a valid breaker block and a very strong one. Again, in order to sum things up, in this occasion we have a break of structure towards the downside, as you can see it right here. So this becomes, let's say, our order block, the highest point before the down move, which also grabbed the liquidity above the area right here, and then it went and came back into our point of interest. If you didn't enter from this initial trade, because now we come impulsively and break above this area without even having the slightest reaction here, not even a wick, okay, we just break very impulsively, this then becomes a valid point of interest where we can trade it in the future with a buy limit order in this occasion with a stop loss at the beginning, at the top of this breaker block, and the stop loss at the bottom of the breaker block. So a breaker block is a failed order block. Price did not give the slightest reaction when it came back here. It broke impulsively, so we expect for it to come back and retest it and then go. Is it gonna hold all of the times? Of course it is not, but it is very, very strong. If you back test it, and if you implement it into your trading arsenal. So you asked for proof and proof I delivered. You see the precision by which I'm mentoring the trades and how I'm calling these trades. Either go ahead and become a member of the Discord community. Of course, if you're a serious trader who is taking his or her education seriously, you would go for this option instantly because I am proving to you how good I am from my courses in pinpointing those areas. If you want personal mentoring, of course, we can discuss about it. You can email me and you can join the Trading Signals, which is one of the cheapest options for the quality that I am providing. As you can see, this is absolutely nothing. I made this option very cheap, so many people from many different countries can afford to enter the Trading Signals. But regarding the courses, this is something that you learn once and you keep it for a lifetime. Okay, this was the breaker block. If you learned something, please leave me a like and subscribe to my YouTube channel for more free educational content on smart money concepts. This is gonna do it for today. Thank you all for watching. Until next time.